Welcome to India Market Open. It's bright and early on Monday morning, guys. No big events except earnings. I guess this is the last leg of the earnings season, so there'll be lots of reaction and lots of managements we'll be talking to.
Yeah, I think the global cues, though, are one to watch out for, and that's reflecting perhaps in the implied open.
Yeah, but frankly, we can do with a bit of a quiet, right? I mean, earnings season, budget, policy. I think we need a break. So I'm happy that this earnings season is coming to an end this week.
Elections are coming.
Yeah, but that's some time away, Tamanna. Give us a chance to breathe. Give us a chance to breathe.
Then the full budget in July.
Give us a chance to breathe.
We have 2 months at least. Yeah. At least 2 months. Let's enjoy the moment.
All right. So, well, we may have, the wish of a quiet day today, but it's unlikely to happen because if you look at your implied open, you're looking like you're off to a positive start today, and where that's perhaps coming from. One of the factors is a very positive outlook as far as the US is concerned in terms of the economy, blockbuster results. Pretty much 80% of your S&P 500 listed companies have beaten estimates. It's a tech rally also which has boosted Wall Street. Pull up the NASDAQ as well, was up 1.5% on Friday. The S&P 500 closed above the 5,000 mark for the first time. And one of the things that has really, lent itself to those positive cues is the downward revision of the December CPI data, which was 0.3%. Then the government comes and says, no, it's actually 0.2%. So you're seeing inflation in that sense trend downwards, and that's what boosted tech stocks as well. The 10-year was flat as a result. Crude is one to watch out for. Crude has slid back after rising over the weekend, but the tensions, the underlying tensions which are hitting crude prices definitely continue. The latest peace proposal by Hamas has been rejected. Israel is on with its entire operation in Gaza, so that's concerning. Asia is quiet for sure. China is going to be shut the whole week. A lot of Asian markets are closed, but we can pull up the Nikkei. Japan is open, and perhaps some trends from there. Japan and Australia, pretty much all that's showing some action in Asia. I'll quickly take you through the fund flows on Friday before I hand back to Niraj and what we saw over there. Remember, it was not too much in terms of volumes on Friday, and FPIs were buyers there. 142 crores is what they bought, and DIs sold for 22 crores. The big volumes, though, have not come out yet. Markets are looking for the next cue, Niraj.
Yes, just before we get to trade setup, I think the big thing that also came out, and everybody's talking about the India valuation, the Morgan Stanley note on India is very strong, right? I mean, Jonathan Garner going out there and saying that India is the top EM pick, and within Asia as well, India, Japan kind of stay the top ideas. And amongst all the things that he says, I mean, something that a few other people have warranted, but when Jonathan Garner says you stand up and take notice, is that premium valuations are warranted by the superior fundamentals that India has. So I thought that
the Patek Philippe analogy continues.
In some sense, right? Yeah. And this is like Jonathan Garner sending out that Asia note to all their clients and saying that India is very likely to remain expensive, structural outperformance, so on and so forth. I thought that note is very interesting, independent of the Sensex or the Nifty targets that they may put out, but just the fact that there are people saying that India will remain expensive.
While Jonathan Garner says that, Mark Mobius as well, that I spoke to on Friday, was of this very same opinion. He said, we hold 25% India exposure, which is the single largest exposure to a country in his emerging market fund. He said, while we are valuing companies and looking at India as an expensive market, a lot of it is not very forward-looking. So the growth is so strong that those valuations are justified. But just a quick one on, while those are the two guys who are very bullish, CLSA.
No, sorry, just a word on Mobius, nothing else, but people tend to forget, people who are newbies tend to forget that the original EM expert is Mark Mobius.
Is Mobius.
And he did say, he said, I was in the country a few months ago, and we were talking about real economy, and it's funny, it keeps coming back to me in various forms, and he said, historically, while I've always made a trip to India, I can significantly see a difference. You can see things changing, the vibe, the whole conversations have actually changed. But talking about expensive and not expensive, I think CLSA put this article out, their report last month, where they say that India stands now to be the most expensive market in the world. They also said it's the only market that's trading in the top decile of its historical trading range. CLSA, Morgan Stanley, well, the market's clearly weighing both and consolidating as expected.
Yeah, Yeah, so you can argue that. Actually, the trade setup, I mean, on the trade setup, that's what I think, because main indices last week had a very quiet week. It was only PSUs which kind of were to the fore. And I dare say, just looking at the numbers, ONGC, SJVN, Midhani, SCI, etc.
Not great.
Let's see if there's a bit of a breather there on the PSU pack today and maybe for the rest of the week. The other aspect is that a lot of people have been talking about is, can there be a V-shaped recovery in private banks? The weightage of private banks, guys, by virtue of the selling that has happened, has come off by nearly 500 basis points on the Nifty. So that's the extent of damage that has happened. Can there be a V-shaped bounce back? Now, surely the argument around valuations is fact, but if you look at the delivery-based selling that happened last week as well in almost all the private sector banks, and not just HDFC Bank, I think there is an issue there. The delivery-based selling leads one to believe that a V-shaped recovery is not necessarily very, very likely. Sure, you could buy them right now. They are great valuations. 1 year down the line, you'll be laughing your way to the bank, hopefully. We all hope so because we want banks to perform. But the V-shaped recovery from a trading perspective may not necessarily be the case, even though the whole of last week I've been saying that these are levels from where the quant indicators indicate the market is ripe for a bounce back. May not be banks though. Lastly, just from a sectoral perspective, news flow results, Milake, pharma, probably the sector of the day today for right and the wrong reasons, and cement for the kind of results that have come out, guys. I mean, the stocks have moved up a little bit, but not surprising as we reach the busy end of the construction season, that you see cement dispatches month on month go up, and therefore the stocks continue to see more activity.
Yeah. A lot of stocks really in focus today, but let's start with the big ones
to watch. So you've had, I'm just going to add auto to that list, right? Again, fantastic number. So auto sector along with pharma could be one you want to closely watch out. We'll quickly take you through the big earnings. Two big ones, one from the pharma, one from the auto pack, but I'll start with Hero MotoCorp. Fantastic numbers to say the least. We generally seem quite impressed with what we've seen on Hero MotoCorp. Their revenues were up substantially, up 21% to come in 9,724 crores. EBITDA was up nearly 48%. Margins have expanded substantially, and I think that is what the street is going to be very excited about. It's up at 14% versus 11.5% that was seen in the same quarter last year. Well, what stood out for us on Hero MotoCorp was the fact that most brokerages are optimistic. They've all upped their target price on Hero MotoCorp. We've seen Jefferies and Nuvama for now. Both those target prices now stand at 5,650 and 5,600 respectively. Well, they're poised. What brokerages believe is that Hero MotoCorp is poised for a strong growth going ahead on back of two-wheeler demand. Premiumization and EV are the two verticals or segmentization that is going to work out for Hero MotoCorp going ahead. Free cash flow as well is expected to remain strong. So that is the Hero MotoCorp story. No upgrades as such, but increase in target price is what's going to drive the counter going ahead. And the fact that the free cash flow and earnings have been strong, margins are good, the counter will see some buying in early hours of trade today. Well, let's move on from Hero MotoCorp to the other one that looked pretty fantastic was Honasa. Their revenues were up 27% to come at 488 crores versus 382. EBITDA was also up very sharply at 34 crores versus 11.8 crores. Margins here to have expanded sharply by 395 basis points to 7%, so versus 3.08 that we saw in the same quarter last year. A couple of things that stood out for Honasa is their same-store sales have actually grown quite substantially, up 31%. Stronger volumes have led to higher growth. Better festive demand is what pushed this quarter for Honasa. Industry growth in line with industry. What you also want to see here is that, and this we've seen quarter on quarter for Honasa, capital efficiency. The fact that they're sitting on a huge pile of cash helps them with their working capital cycle, which continues to stay at -6 days. So capital efficiency is what has been a pretty impressive factor for Honasa, and that continues to play ball for them. The stock went home with gains of 4% on Friday. Won't surprise me if we get a good gap up on this one too. The other one that's definitely on our radar, and I'm excited about this, is Aurobindo Pharma. Very, very strong earnings for Aurobindo. Revenues were up 14.7% at 7,351 crores. EBITDA was up 68% to come in at 1,600 crores. Margins also expanded substantially from 14.8 that we saw in the same quarter last year. You've seen an expansion of 22%. 8%. Net profits also were quite high, at about 92% higher for the quarter. Remember, Aurobindo since December 21 hasn't done margins such as these, so that is what we're excited about. Over 20%, they've not managed to beat that since December 21, so the markets will be excited about that with Aurobindo on the margin front, and profit as well has been the highest ever posted by Aurobindo Pharma. So the stock in early trade, like Niraj and Tamanna said, Pharma is going to be a space to watch, and Aurobindo could be the leader of the pack this morning, guys.
Yeah, and Aurobindo Pharma has gone through a lot of ups and downs as well. There was some negative news flow in terms of observations, etc. So all said and done, the numbers may give it that boost, but not everything is hale and hearty. And ONGC definitely may see some negativity. Now, one thing to keep in mind is that, remember, crude prices have been softening, and that's generally not very positive for ONGC. So you did see, and we're taking standalone numbers here. I want to make a point of that. Revenue is down 1%, EBITDA down 13%. Margins have shrunk fair bit, about 600 bips, and net profit is also down about 6.7%. A couple of reasons. Remember, the gas policy has capped prices. On the other hand, there were some weather-related disruptions to their work. And having said that, though, Citi has retained a buy on ONGC with a 285 rupee target. They say that the results are weaker than expected, like we've been mentioning. The EBITDA is below estimates, and oil and gas production trends have been slow. Having said that, their KG production ramp up, which has started pretty much last month, will start showing benefits on Q4. So that's one to remember. There could be an upside going forward. So positive view on high earnings visibility and attractive dividend yield is some of the points that Citi sees on the plus side. SJVN is another one I would say, and Niraj was talking about how for a lot of companies which have run up on the back of promises, the numbers sort of give a clearer picture. So revenue is down about 1.5%, EBITDA down 3%. The margins have narrowed to about 67.81 versus 68.91, so about 112 bips. And net profits, though, are down a fair bit, down 51% at 138.97 crores. So sharp cut over there. There's an interim dividend. Bloomberg put out a story about how JM Financial Institution has cut recommendations on SJVN to sell from a hold, and the target price has also been set down to 72 rupees. So I would watch out for SJVN as well. Of course, they've trailed all of the estimates. Divi's Lab is one, though, which looks, I would say, positive. Revenue is 8.6%, and pharma definitely is a larger trend that we've been seeing over here. Revenue is up 8.6%, EBITDA is up 19%, margins also looking healthy, net profits are up 17%. Nuvama says they have reduced their take on Divi's Lab, but they've increased the price target to 3,200 from a 3,070 earlier. Revenues have disappointed, according to Nuvama. No meaningful margin recovery, and pressure in generics and higher OPEX operation expenses has led to EBITDA margin miss. So quite a few. I'll come back with more, Niraj, because so many stocks to discuss this morning. But what's your top 3 or top 4 on your list?
Yeah, but just a word on Divi's. Much like Laurus and much like some of the others, the CDMO opportunities are taking time to fire. And while Nuvama have done what they've done, Elara, Systematics, and one more, all three are negative on Divi's because of this performance. And in fact, I think if I'm not wrong, the Systematics note by Vishal Manchanda speaks of a price target which is 30% lower than the current market price as well. So much like Laurus, but maybe as Harsh was pointing out, this is the first quarter of margin recovery for Divi's. So it could be interesting to see if the markets reward that or the markets punish the no growth in sight problem for Divi's. But Tamanna mentioned pharma and PSUs. I'm carrying forward that baton. A lot of weak numbers. So Midhani is the other one. Much decorated, very strongly favored stock, but look at the margin contraction there. Revenues were up 8%, which is okay. I mean, single-digit growth, nothing to write home about, but okay. but EBITDA down 45% for Mishra Dhatu Nigam, as a result of which margins contracted 1,400 basis points from 28% to 14%. Now, this is not a good print by any stretch of imagination, even if the valuations were good, which they're not necessarily cheap. And net profit down 67%. So very likely that Midani will have a correction today, in addition to SJVN. SCI, everything else was okay. Revenues were down 10%, which is not great, by the way. One would have hoped that in a quarter which has seen probably shipping rates move up because of all that's happening around Red Sea, but maybe there are disruptions, what have you. But SCI, revenues down 10%, EBITDA down 11%, margins flattish, net profit down 50%. And for a stock that really rallied from nearly 180 to 260, 270, and then has come back, this is not a good print. Very likely that might see a bit of a reaction as well. And last stock, and then I'll come back with others, but the last stock is on my radar is Campus Activewear. Now, we know what's happened to Bata, we know what's happened to Relaxo. Certainly, the footwear companies, which are not necessarily premium focused, are seeing an issue. Campus revenues were up 1.37, so very blah, if you will. But as a result of that, the margin narrowed to 781 basis points, by 781 basis points to 11.92 versus 19.74%. And by the way, the revenue numbers are kind of in line with, mota-moti in line with estimates. The margin expectation was 20.8 and they've come in at 11.92.
Okay.
PAT at 25, expectations of 57. So very bad performance, very likely Campus too, like Relaxos and like the others Batas have done. Might have a bit of a reaction.
I think one that may have a good reaction would be PI Industries.
Waiting for one.
Very,
good number.
very good number there. It's been a multi-bagger in the last couple of years. It's been a favorite for the street. Let me take you through what those earnings are. Revenues were up 17% to come in at 1,897 crores versus 1,600 crores. EBITDA was also up nearly 34% to come in at 553. Profits were up 28% at 448 crores versus 351. They've also approved an interim dividend of 6 rupees per share. Couple of things that stood out for PI Industries is their strong revenue growth is what has pushed them up for this quarter. Margins have also aided PAT. Very solid margins have come in at 27% versus 25% in the same quarter last year. CMS, remember, is the key driver for its earnings, and that's really what's played out for the company in this quarter. 13% growth was in the agrochemical exports, which was again led by a strong product mix and by volumes. What we did see on margins, which is worth a mention, is a one-time impact of a theft recovery. So that contributed about 300 basis points to the margin. So while the margins are very solid, a function of that is a one-off item for PI Industries. So the top line numbers are looking great. There is volume growth, there is revenue growth. They've also talked about aggressively expanding. They've spent 763 crores on acquisitions, pharma acquisition, the tune of 500 odd crores. And remember, the counter was under pressure because of Chinese players entering the pro-sulfane business, which is a key product for PI Industries. But the markets, of course, the management did indicate that this is not going to be a problem because they do hold the key licensing on this one till FY28. So good news and bad, but the good news is that good numbers, and while you'll have listed a few bad ones, this one hopefully should get a little bit of a pop-up this morning.
I wish I had another great one to talk about next, but
I do, but you can quickly finish yours. Yeah, no problem.
So you go good, bad, good.
Good, bad, good. Okay. So Tata Power. Tata Power is one I thought we should bring up. And another, a bit of a blah quarter. I'm going to use Niraj's word of the day, blah. So a bit of a blah quarter. Revenues up, though, about 3.5%, nearly 4%. EBITDA's also doing okay. But, just look at the CLSA note where they're talking about the stock being ahead of its fundamentals on a frenzy of power stocks, and that's really what will perhaps give it not too much excitement. Weak coal prices is a key risk to its EPS, though there is a positive in terms of Odisha discoms and pump storage. They have upped the target, though, to 249. So Tata Power is one that I would watch out for, and we're going to be speaking to them ahead on the show as well. Should we quickly talk about 197? Just because
very quickly, but we are out of time completely.
Because there is no relenting to the news flow on it, and we've broken a story this morning about how that 29th Feb deadline may be extended. That could be looked as a bit of a positive.
For Paytm shareholders, cross fingers. Just very quickly, two stocks that might react positively, Inox Wind and DOMS. Very good numbers from both, margin expansion from both. So watch out for both Inox Wind as well as DOMS. Those are two names that might react. But we got to go across to Agam now to try and understand what is there on editor's cut today, because Agam, are we talking about something good? Because we highlighted a lot of bad numbers right now.
Yeah, we're talking about something really good, in fact. And a bit of an outperformer too. And by that, I mean State Bank of India. What's really interesting is that State Bank of India has gained 20% from its low made in 2024. And if you take that date where it made its low in 2024, the bank Nifty is flat. So this is a clear outperformer. The question really is, what is it that's really driving State Bank of India? In fact, in the last 3 odd sessions as well, it has moved up by as much as 12 to 13%. And a lot is at foot. And for that, I have with me Vishwanath Nair as well as Harsh Saita, who's going to guide us and perhaps tell us a little more about what could possibly be behind this move. Vishwanath, I'm going to start with you. What do you have for us?
So I'm calling it the Giants' age because SBI being the largest lender in this country and moving at the pace that it is, everybody else is sort of in awe of where SBI is at this stage. Yeah. If you look at some of the negatives, now, of course, Q3 results came in about last week, and the numbers did show a bit of a disappointment. Primarily, the net profit did go down because of one-time wage-related and pension-related provisions that they made. This, the bank says, is likely going to normalize going ahead, but it's obviously a disappointment. The other thing was that even if you adjust for these one-time hits, the net profit's up about 1.5% year on year. That's not looking so good.
Yeah.
If you look at fresh slippages, they are up largely driven by retail NPAs. There's lower recoveries and upgradations that have happened in Q3. So those are the slight disappointments as far as the Q3 numbers are concerned. But of course, for a bank like SBI, you need to look at a wider range of numbers. And for me, the moonshot sort of a situation for SBI is the fact that FY23, they ended at the decade's best credit growth, 16-odd%. It's tapered off to close to 14.5%, 15% now, but it doesn't look like it's going to slow down further from that point of view. Asset quality, best in recent history. You're seeing that despite the regulatory tightening on unsecured loans, the bank is continuing these unsecured loan growth at a reasonable level, about 16.5%, which is not too bad as far as SBI's size is concerned. You look at any kind of the capital adequacy. Now, of course, during the third quarter, there was a hit because of the RBI's unsecured loans, unsecured loan norms, 123 bips dip on a quarter-on-quarter basis. But what the bank is guiding is that going ahead, there's going to be improvement on the capital adequacy simply because of the business, the nature of the business that they're in. Investment book valuation that will come in from 1st of April, that'll boost capital adequacy. You've got ROE outpacing credit growth. That's going to help with capital accretion. These things are working in favor of State Bank of India.
Right.
Business per employee, now that's the important bit, because when you talk about wage-related or pension-related provisions, you have to look at what these provisions are leading to. As far as SBI is concerned, that business per employee number is at about 30 crore per year. That's a lot. That's a very high number. Yes. Considering, of course, SBI's large employee base. And they're not seeing that kind of high attrition that some of your private peers are seeing.
Right.
One point that I want to mention is on the corporate credit growth. Now, there, SBI is beating the private sector peers just hands down. There's no way that a private sector bank in the current business macro environment can compete on pricing with SBI. SBI is sitting at a reasonably healthy credit deposit ratio. They've got liquidity reserves, 131% or LCR. They've got, of course, deposits are still growing, 14.5%. They've got that in place. So unlike their private sector peers, that cost of capital or cost of deposits, as well as the lack of liquidity or tighter liquidity situations, does not seem to be affecting SBI that heavily. 4 lakh crore worth of additional SLR, unencumbered SLR holdings. All of that is just free liquidity lying around on the balance sheet for them to grow much faster.
Right.
But I'll move to Harsh for any view on the valuation of the bank.
Yeah, absolutely, Vishy. So before I go to valuations, let me just add a little bit to what you've said. I think, Vishy, what we were speaking about last evening as well, with regard to ROAs, that's going to hold the key, right, when it comes to SBI, including its valuations and how valuations are to be looked at. Now, ROAs have breached the 1% mark. They've come off that 1% given the one-offs that have happened. Probably another quarter of a bit of pain with regard to provisioning, because there'll be 5,400 crore of provisioning which will happen in Q4. And maybe that's a bit of an overhang with regard to ROAs. But can ROAs sustainably be above that 1% mark? At least analyst estimates seem to suggest that it will be, because they are penciling in a profit after tax FY25 of 70,000 plus crore as per Bloomberg estimates, average analyst expectations. And therefore, you will have that 1% plus ROA continue to come through at least in FY25 as well as 26.
Sure.
Right, which is a big plus. As you said, credit growth will be solid, but the one other key perspective to this is with the ROA, I also want to try and comment on the margins, because margins, it seems, have bottomed now. And therefore, there is very little downside scope for ROAs, right? That's just the general sense that we're getting. Of course, based on estimates, etc. Now, with regard to valuations itself, you're seeing valuations at roughly 1.4. You're looking at PSU banks which have rallied substantially. Probably on a low free float as well, so let's give it a little bit of discount there. But at 1.4 times trailing 12 months, it's looking extremely good. And at 1.1 times forward, it's looking quite attractive basis your last 5-year average, which is roughly 1.4. So you're trading at your 5-year average, but you're looking at probably a year in which banks have had the best couple of years of run, and the runway seems to be quite solid with regard to the next 2 years in terms of visibility. So, so overall, it looks like despite this run-up, valuations still seem quite decent. It doesn't seem to be stretched in any way, especially for SBI as well as a couple of other larger ones like Canara Bank and Bob. But especially with regard to SBI, given the size.
I just want to add one point, Agam. During the results announcement, the management was very clear. They don't need the capital. They're about 13%, 100 bips higher than the regulatory minimum. They're fine as far as the growth is concerned. If they need to, they're ready with a capital raising plan. Just listening to the valuation bit, I'm thinking that if there was to be some kind of a QIP or an equity raising plan, SBI is going to be pretty well placed as far as your capital position is concerned, as well as market valuation is concerned. This is important in the current environment because most banks are seeing some amount of movement on the valuation front, simply because business has changed. Last 2 or 3 years have been a period of fairly easy liquidity. Now it's tightening. Now businesses are sort of becoming slightly more complicated on the banking front. So SBI may be best placed to capitalize on any future growth.
Sure. I just want to put things into perspective because we've seen a sharp divergence in the way SBI has moved and HDFC Bank has moved. And it's natural for anyone to compare the private sector banks with the state banks. How do you think this pans out? What do you think investors have at the top of their mind at the moment?
I'll tell you what, during the analyst call that SBI held after its results, they said that they have headroom to grow the balance sheet by about 7.5-8 lakh odd crore. That's a massive number, right? HDFC Bank is saying that every 4 or 5 years they're going to add another HDFC Bank. Well, here you have SBI, which is doing pretty much the same thing and at a much higher base. So if you look at it from that point of view, there's a lot of firepower that's left with SBI at this stage. Now, I want to caveat this with, we have seen this in the past. And it didn't really pan out the way people planned it, especially, chief of all these banks. Let's see what happens. We can't write off HDFC Bank yet because at the end of the day, it is one of the most efficient lenders that we have in India. Can't write off HDFC Bank as SBI doesn't look weak in any comparison at this point.
Well,
And Agam, on valuations, you're looking at a sharp divergence. You're looking at HDFC Bank trading just above 2 times price to book, and you have SBI trading just above 1 times price to book. So from a valuation perspective, SBI is probably trading at a 50% discount.
Right, absolutely. So, of course, to a certain extent, the state bank valuations have always been, low as compared to the private banks. But a lot of factors, a lot of points to ponder about when it comes to State Bank of India, which clearly is at the moment in the driving seat, quite literally, even in terms of stock prices and the way things have panned out over the course of the last few days in the Bank Nifty, among the Bank Nifty constituents. The question really is, where do we go from here, and how does the private sector bank, sector play out going forward? Well, these are questions that will be answered down the line. But Harsh and Vishwanath, thanks for joining us and getting us that perspective. And with that, it's time to slip into a short break. But on the other side, we continue with markets coverage. Stay tuned to NDTV Profit.
Welcome back. You're watching India Market Open. A quick check on how implied Nifty is doing this morning. It's expected to see a gap up as we gear up for trade. But remember, it's going to very likely could be a day of consolidation with stock-specific action that will be driving the street. There are also a whole bunch of brokerages that have come out with their reports on PB Fintech in particular. Anushi is joining with more details on that. Anushi?
Right. So on PB Fintech, Jefferies has come out, initiated a buy over here, implying about a 23% upside at a target price of about of about 1,150. So they are expecting about a 30% CAGR growth over the next course of 2 years, that is from FY25 to 27, and they are backing this by, and also they are backing of 5x EBITDA jump expectation from the 23 to 27 period. So some strong expectations over here. But on the revenue front, they are seeing about a moderation from their earlier 30% CAGR growth to about 22% CAGR growth over FY24 to 27 after the new RBI measures that have taken are in place. Again, key risk over here continues to remain on the regulations that are still evolving in this space, and also strong competition which might emerge from Geo. Another one that I want you to focus on is also Apollo Hospital, in which Citi has maintained its best pick among the hospitals, wherein it has maintained a buy at about 7,670. This was back on the back of Q3, which was mainly largely in line with expectations. While the EBITDA was impacted due to the seasonality and cyclone impact, the management continues to maintain its 200 bips margin expansion guidance over the next 18 to 24 months timeline, and sees a break even for its online 24/7 business. So that can be on radar. Again, Nuvama has maintained a buy on Apollo Hospitals as well, with a target price of 7,500 on the back of its strong hospital and offline pharmacy growth. So definitely these two should be on the radar today.
Right, Anushi, thank you for that. Apollo Hospital is definitely one to watch out. All-round positive house notes on the numbers as well. Now, another set of stocks that we must talk about this morning: PI Industries, Inox Wind, and Honasa, that came out with its earnings. We mentioned a few of them briefly in our trade setup, but Varsha joining in with more details. Varsha.
Good morning, Tamanna. So let's start with PI Industries, where you see our revenue was up 17%. Now this was led by 13% growth in that is agrochemical exports, which was led by volume growth and newly commercialized products. Also, if you see, there's improvement in EBITDA margin, which was of course led by favorable product mix and operating leverage. But the main thing why EBITDA margin has been improved is one-time impact of recovery of theft material, contributing 300 basis points improvement in EBITDA. Then we have Inox Wind, where you see huge uptick in revenue of almost 2x, while EBITDA is at 92 crore versus loss last year, and margin stands at 18%. Now, if you see, with the single largest order win of almost 1,500 megawatt, order book stands at almost 2.6 gigawatt, and they have target to achieve net debt-free status for the company in the next few months. Then lastly, we have Honasa Consumer, wherein revenue was 27, there was growth of 27% in revenue. Now this was led by volume, and also if you see, the same store sales growth is up almost 31%, and EBITDA is up 2x at 34 crore, while net profit is up 3x, which is led by sales growth.
Right. Thanks for that, Varsha. There's a whole bunch of stocks that will be in focus. Honasa, PI should be getting a thumbs up, guys, this morning. But just a quick diversion from equity markets to another asset class, which we've been tracking, and I think investors generally have been tracking as well, is SGBs. Sovereign gold bonds. Remember, they open today for subscription. They will run for the next 3 days. So if you're looking to add paper gold to your portfolio, you must look at SGBs, which are open for subscription today. We will take you through a lot more details on that later on in the day. But coming back to the markets, guys, I think lots of stock-specific trade, and I think the markets are going to focus on that. One we didn't talk about was ONGC earnings.
I did.
You did. You did mention ONGC. Yeah.
ONGC.
Yeah. So mix sort of back largely, but I think the broader markets may continue to spend time consolidating again. Yeah. Bank Nifty, of course, has maintained 45,000. I think traders taking a little bit of heart from that.
Yeah. The PSUs might be a bit of a pickle today. I mean, we've seen a bit of a pullback sometime last week. We did a piece on that as well, as to maybe a breather. But just the fact that fundamentally the results have been so bad, and all of them have come in a clutch. Since Friday evening, 5 PSU stocks coming out with numbers, all of them highly valued, all of them weak. So that is probably a bit of a pickle. Anyways, that index has come off a little bit since the time we did that piece on Editor's Cut as well. but just that stretch valuations, not so great earnings. Yes, a lot of promise, but maybe the market wants performance every quarter.
I have a slightly different take on PSUs. Yes, they're definitely cooling off as they should have, and as is very, very valid. But you are going to hear, by you I mean all of us are going to hear more and more on government intent on driving your goal to develop nation, etc., with PSUs at the forefront. So there is going to be more investments, there's going to be better cleanup of books, more efficiencies as well. So this is a mood that could change fairly quickly, is all I'm saying.
100% sure. The only question is, like for example, when I'm not comparing the two, but I'm just saying, for example, when this whole Ayodhya thing happened, and there was a small stock called Praveg, which went through the roof, went up to all the way to 1300, right? And it just seemed that there was just so much of exuberance around the valuations that it left little room for error. The stock has corrected to 1,950 and are now staying there. I'm sure at some, or rather I'm not sure, nobody's sure, but I believe in 2 years' time, Praveg could be higher than where it is right now based on the commentary and the earnings that they're talking about.
Correct.
But just that the valuations are so stretched and the numbers not getting delivered, might see a bit of a pullback there.
We've talked about this, where order wins are happening, the challenge is going to be execution.
Yes.
And we are seeing it in the earnings. So a few quarters out, right? So while valuations are justified for order wins, they still don't explain
no, but
the
here's
kind
the
of
deal, Samina.
challenges.
If we can pull up those graphics, I don't know if we can, it's just too much ask, but if we can pull up those earnings, because we put out the comparative valuations. Chinmay was there, pulled out those valuations in that story. If we just look at either price to book or price to earning, whichever you like, right? Let's say, compare it to 10-year averages and budget for some bit of a uptick, because last 10 years are not testimony to what could happen ahead for PSUs. They have changed completely under this current government. But still, that's a gap of valuation is so high. At some point of time, you feel that some of these stocks need to see some bit of gravity.
But really. I would argue today, this morning, all of us spoke about notes and outlooks on the Indian market overall as premium, expensive. Valuations are high, but we still like it. At some point, why would that not extend to the PSU pack?
Expensive,
that's
right?
the only
I
thing.
think that's the argument.
So at some point of time, people will say that if BHEL is trading at whatever 151 times price to earnings, is it expensive at 100? Yes. Is it egregious at 151? Certainly. So could it cool off a little bit? So even if it does nothing, but just that the valuation multiple cools off from 151 to 150, that's a 32% shame off. I'm not saying it will happen. It could happen.
Niraj, when Morgan Stanley report says what it says, it also says private capex is on the pickup. So are we saying that PSUs are the only ones that can carry the baton ahead? You also have private sector, India, that is going to see a pickup, right? If that doesn't participate, all those numbers will go out of whack. So,
but there's things that PSU companies are doing that private companies are not necessarily going to be able to do in terms of where government is spending its money. So there is a bit of an advantage there.
There are some sectors where the government has said, I mean, defense, for example, right? They've said that they want private companies to come in.
It will always be hedged and it will always be lesser because it's such a sensitive sector. You will not open it up completely. But so a lot of conversation there.
But for now,
so is there business momentum? Yes. Is our valuations expensive?
Very.
So therefore, could there be a case wherein while business momentum continues, valuations could just see a bit of a pull up?
And maybe not a price correction.
Look at that price to book number.
At least a time correction is only, and it's
exactly.
only,
it would be a time correction.
It's only healthy.
It is very healthy.
So more pain to come before you see maybe an upswing. All right, but a whole host of other numbers that we're talking about this morning and more earnings on our radar. We should talk about Bandan Bank, Campus Activewear and Tata Power, some of those stocks that we mentioned, but Bandan Bank definitely will be hearing from the management also ahead on the day. Harsh, what can we add in terms of what qualitatively these results look like?
Well, Tamanna, in terms of, let me start off with Bandan Bank. It's a good, solid set of numbers. After a while, we've seen a back-to-back quarter of good numbers coming in from Bandan. So that's one big positive. And that reaction that's how the reaction ought to be on the markets as well. Of course, need to wait and watch for that reaction, but 20% growth plus with regard to NII is quite solid. They've guided for a 7 to 7.5% kind of a margin number, which they've achieved in this quarter as well. And the loan growth is in high teens. So second consecutive quarter of loan growth as well. So that's the other positive. With regard to deposit growth as well, there's good, solid 14.5, 15 odd % of deposit growth, which the bank has clocked in this quarter on a year-on-year basis, of course. And that's there's nothing much to complain about there either. In terms of just the overall metrics, you're seeing profit after tax, which has doubled because provisioning has come off. So the asset quality seems to be getting better, even though NPA on the absolute GNPA side, the number has actually inched up a little bit. So that's one piece to watch out for. And as we speak to management, we'll try to break some of those numbers down. So that's on Bandan. Let me quickly switch it over to Campus Active, because that one, again, it's been a disappointing quarter here for Campus, clearly. You've seen 1% odd growth when it comes to top line, but EBITDA has really disappointed. Even compared to street estimates, that number is sharply lower. And profit after tax is probably less than half of what the street was really penciling in. So possible negative reaction on this counter, at the start of trade itself today because of those poor set of numbers. Last off, we have Tata Power, mixed kind of a bag there. Overall, you're looking at revenue, which is up roughly 3.5%, and PAT, which is up 2.5%. But we have a CLSA note, we have a couple of notes which have come out, Citi note as well, what it seems to be the case is it's a mixed quarter, and it's going to be in terms of execution. How the execution starts to play out for Tata Power is going to be one of the key monitorables that investors will look out for going forward.
Right. Thank you for that. There will be a whole bunch of them. We'll add the likes of Adorms, Sri Lanka Sugar to the list, MCX, that will be reacting to their earnings today. Well, Sudeep Shah, Deputy VP Head of Tech Derivatives Research at SBI Cap Securities, joins in. Sudeep, good morning. Let's start with how do you feel about the Nifty? We've spent the last few weeks consolidating. This morning, while implied Nifty is indicating to a gap up, do you think there could be follow-on buying that would emerge today in terms of direction and trading range? What is the call on the Nifty?
Good morning, Tamanna. See, what we are seeing on Nifty is that last week on Thursday and Friday, Wednesday and Thursday, we have seen markets witnessing some kind of a resistance closer to 22,000, 22,050 levels now. This is exactly that same level where there was a pending gap which was created on 16th and 17th January. And that is not able to, Nifty is not able to cross it on a closing basis now. So every time the markets are approaching that zone of 22,000, 22,050, there's some jittery moves or some kind of selling pressure from higher levels is visible. So on the upside now, I feel that 22,000 is a capped resistance as of now. On the downside, the 10 as well as the 20-day exponential moving average of 21,650 to 21,730 zone now. So this band is providing some kind of a decent support. So all in all, I feel that markets still could continue staying in this range between 21,600, 630 on the downside, and 21,950 to 22,000 on the upside. And while GIFT Nifty is right now dealing at a 70-80 points positive opening, which would imply 21,850, 21,870 as a possible open. Again, at that zone, I feel there could be some kind of a resistance because 21,900 call writers have also built positions aggressively on close on Friday. So I feel that it's important that we don't just rush into the trade and we see whether the markets, whether Nifty specifically is sustaining above this 21,900, 930 mark on the upside for today's session.
Okay. Watch out. Sudeep, what about specific stocks for the day today?
Good morning, Niraj.
Very good morning.
I feel that cement stocks in the last week they're showing some kind of a positive momentum, and specifically if we see Grasim, now Grasim has closed at its almost highest level post the consolidation since December. So since 1st of December, we have seen Grasim consolidating between 2030 on the upside and 2150, 2160 on the upside, sorry. So from current levels, I feel that there could be a breakout in Grasim. The daily, weekly, monthly charts are hinting towards this same scenario. A lot of other cement stocks have also witnessed positive momentum. So I feel all in all, cement this week could outperform, and Grasim could be the leader of the pack. And 20 could act as a strong support, which could be with which we could buy Grasim with a stop loss of 21.20 for a possible upside of 22.50, 22.70. The second stock would be Bank of Baroda. Now, we've seen PSU banks showing strong momentum in the last week, specifically Bank of Baroda, PNB, Union Bank. So our top pick is Bank of Baroda. If we see the weekly charts, last 3 weeks, we have seen a higher top, higher bottom formation in this stock, and post some kind of a corrective movement from 260 to 245, where the stock retested its 10-day exponential moving average, and thereafter witnessed a strong pullback on the upside. So we feel that there could be a continuation of positive momentum on the upside in case of Bank of Baroda, and this could be bought with a stop loss of 256 and a target of 275 to 280 on the upside.
All right, a lot of focus on banking. Just a few more if you have your eye on them, Sudeep. And this is Tamanna here. So very good morning to you. Bandan, if you think there is some potential there. PI Industries and Oro Pharma. All three of them news of results, etc. And those reactions will come in. But I'm curious to know how you see them on the charts.
Good morning, Tamanna. See, what we are seeing on Bandan is that this stock has been a rank underperformer. Now, even while we complain about HDFC Bank being an underperformer or other private sector banks being an underperformer in the last several months, but still they have held on to their key support zones. But in case of Bandan, every time the stock has moved to 250, 255, there has been a big sell-off. And once again, the stock is at the cusp of an important support zone now. Since last, if I'm not wrong, since last July, there have been 3 retests of the zone of 210, 211. Now, I feel that if 210 is taken out on this stock, there could be a serious downside, which could be up to 170 levels also. So for me, 210 would be the key for Bandan. If 210 is taken out, it could be a bigger downside that could open up. The second stock which you were referring to, PI Industries. Now, PI Industries, in the last 3 months, we've seen some kind of a decent correction from 3,900 levels up to 3,200 levels. And I feel the stock is not completely on a negative momentum, and in the last few days we have seen support zones around 3,250, 3,300 holding well, and once again the stock has now sustained above its 10 as well as 20-day exponential moving average. So I feel till the time 3,400, 3,420 holds on this, we could see the stock at least moving up to 3,600 where the 200 DMA is placed, and if that is crossed and sustained, then further upside also could not be ruled out.
Right. Sudeep, hi, it's Samina. Good morning. Just a quick one on Hero MotoCorp as well. The stock has been on the radar. Friday had a good day. Earnings were also pretty impressive. How would you trade Hero Motor this morning?
Good morning, Samina. What we've seen in case of Hero Motor is that this stock has been on a big uptrend. Now, in the last 4 months, starting November 2023, now, since it broke out of that consolidation range that it was in October and November, so from 30 to 80, the stock has sustained above its 20-day exponential moving average and has never broken even once. So this 20-day exponential moving average as well as the 10-day also has been violated, but it did not sustain below that for a longer time. So I feel till the time this 4720 zone is guarded, this stock could still continue outperforming, and we could see levels of 5,100, 5,200 in the next few sessions. For any long positions that anyone would be having, I feel a stop loss of 4720 would be a decent level to hold this stock with.
All right, super. Sudeep, stay on with us. We're taking a very short break, but a lot more stocks to discuss, a lot more action before the markets open. But even as we keep our focus on the markets, good news this morning. In a major diplomatic triumph for India, 8 veterans of the Indian Navy who were sentenced to death in Qatar were released by Doha today. The capital punishment was commuted to an extended prison time earlier following diplomatic intervention by New Delhi. The visuals you're seeing is of them arriving this morning, early morning at the Delhi airport after the release from Qatar. This is a big deal because it was a hard-fought diplomatic negotiation with a friendly country, but nevertheless, they have acceded to this intervention and these guys are back home. So on that note, we'll take a very quick break, but we're back in just a few minutes, pre-open and a lot more when we return.
All right, back with India Market Open right here on NDTV Profit. We are in conversation with Sudeep Shah on clutches which are doing well. Sudeep, you've given us your views on some of the pockets which might react today. Just wondering, can the PSU index, the PSC index, or some of the PSUs take a bit of a down drift? I don't know which ones do you track on the charts, but a view on the PSC index and any of the PSUs that may have a view for, because they've come off a little bit from the peak of last week.
Niraj, see, what we are thinking is that if you see stocks like Power Grid, if you see stocks like NTPC, they could still say hold on to their current levels where they are trading at. But a stock like say REC, PFC, where we have seen some kind of a serious liquidation on Friday, say 5 to 8%, anywhere they had seen the cuts. So I feel those should be avoided because see, they were the ones which were the first movers and they've seen the biggest rallies. So I feel there could be some profit taking which could be witnessed. And overall on the CPSE index basis, now if we see the index which had broken out above 3900 levels on November 2nd. Now if you see that index that has not even breached its 20-day exponential moving average even once. So, and as well as if you see the 10-day exponential moving average now, that is the shortest barometer of any for gauging any trend from a short-term perspective. Now, if that index also has been only violated once, and we have seen a pullback on the next day itself when there were cuts in the month of January once or twice. So, from the current levels, I feel while there could be debate that this indices have rallied too much, but I feel if one is a trend follower, then at least that 10-day moving average, which is around 5,600, 5,580 on the downside, if till that is held, one could still hold on to their existing positions. I am not recommending buying any fresh positions at this current moment, but any trailing stop losses one needs to keep for this index, then it would be around 5590, 5580 on the downside. Once this level is violated, then one could consider booking their profits and at least wait for a significant dip to re-enter the stocks.
Okay, fair call. So wait for a dip is what Sudeep Shah is recommending. Now, by the way, we make well classify today as a pharma day simply because of the amount of news flow there. We've discussed the results, right? There is Aurobindo Pharma, there is Divi's Lab amongst the large ones. Then there is Jupiter Lifeline Healthcare. There is Alchem Labs, Brokerage Notes, and a bunch others. Something that has happened, which may not necessarily move the needle on Laurus Labs, but it's a big win from a cancer treatment perspective. The CAR-T cell therapy, which is done by ImmunoAct, a made in India CAR-T cell therapy, has been now tied up, wherein ImmunoAct ties up with Apollo hospitals for a rollout of this. This could be a big move in cancer treatment. I don't know if it really impacts Laurus Labs today, because remember, ImmunoAct is not a fully owned subsidiary or a majority owned subsidiary of Laurus Labs. In case you see a reaction, this could be the reason, but please remember, there is no EPS movement happening in the near term because of this news. But Deven Choksi is with us. Deven, good morning. Thanks for taking the time out. Great having you. Just wondering, I'm starting off with pharma. We've discussed the index at length already. Just starting off with pharma, simply because of the kind of news flow and the kind of results that have come in. We've seen mixed views on Divi's Lab, for example, wherein some brokerages are saying that the first quarter of margin expansion and the worst is behind, while some are saying that even if the worst is behind, the good times to come are some time away, and therefore we remain sellers. So that is one. Oro has results. Some others have results. I just spoke about ImmunoAct. What do you think about this space? What stands out for you?
Niraj, good morning. Well, I think the important point out here is few. On one side, mainly the input cost related issues, which were haunting the pharma companies in last few quarters, they have by and large settled. And more or less, these companies have been showing their resilience as far as the absorbing the cost is concerned. To a greater extent, they've been able to successfully pass on the cost, both in CRAMS model, PA model as well. So from that perspective, the margin protection is fairly understood and visible going forward as well. On the other side, the efforts pertaining to the specialty generics in some of the pharma space, have actually started yielding results. And that's getting reflected into some of the major numbers which we have seen in this result season so far. So to a greater extent, this is also creating a larger amount of, growth as far as, the earning outlook is concerned. You mentioned about Divi's and Laurus. These two companies remain absolutely very, very convincing and promising. Whatever has been the situation with them, the demand scenario is now basically showing the signs of improvement. Their customers are showing the commitment again, to lift the products. So to a greater extent, I would believe that the worst seems to be over. Maybe it may not happen that in one quarter flat, they'll start rising. But both Divi's and Laurus, I believe, with a good model, they should be, giving a reasonably good amount of rise, going forward in their working in subsequent quarters. So it would be more inclination towards looking at the stock from the investment point of view than to discard them from the portfolio.
Okay, so that's the view on some of the pharma names. Devin, the other aspect is the kind of disappointing results that some of the PSUs have come out with. Everything from ONGC fine, but SJVN, Midhani, Shipping Corporation of India, just very wobbly set of numbers. There are some others like MCX which are in the private space which have come out with weak numbers, but I'm talking about PSUs. What do you do if you have these PSUs in your portfolio? Let's say you got lucky, or let's say you were smart and you bought them earlier, you were riding on some great gains. Would you book those gains on the back of these numbers, or would you stay long?
Niraj, I think these numbers of the PSUs, I think I'm always very skeptical about these numbers sustaining. Largely because of variety of the facts, I think in each and every company. On one side, the market is gung-ho about the story about the PSUs. I think I'm not doubting the potential of, I think, these companies. But the fact remains that I think the inherent nature of the business won't allow them to scale up the business in a manner in which market anticipates. Be it oil marketing, oil refining company, oil exploration company, even for that matter, metal and commodity companies. I think each one of them would have limited ability to create the upside in the working of the company, having got, I think, despite of having got the huge amount of potential. So that is a realization that remains very, very clear. And that is one of the reasons for which I think these companies have been up till now quoted at a valuation which was comparatively weaker compared to the peers in the private sector. I think that story is unlikely to change beyond the point. Neither of these companies, I think, which are likely to, I think, show dramatic improvement in the stock price. So if the market price probably moves up in a hurry because of the higher potential, then it would be a case for sale. As of now, I think we'll have to ride that particular wave, wherein I think the more amount of money is chasing PSU companies, and that is the reason for which I think the stocks are rallying. Given the kind of higher amount of rally possibilities, I would think that I think one will have an inclination to look at these companies from the selling point of view if the working is not catching up. So wait a while before you start booking your profit. That would be my approach on this particular stock.
Right. Devane, as we are, of course, gearing up for trade this morning, lots of stocks that are going to be reacting to earnings. But I'll quickly come to you on auto. So Hero MotoCorp, Tata Motors, two outliers in terms of earnings and stock performance. Way ahead, what are you making of both of them?
Again, I think the best of the times in which they are and they have entered into. I believe on one side, we have the consumer having the power to spend money. On the other side, we are expecting the interest rates to come down in next 3-4 quarters from here onwards. So it is again going to help generate higher amount of buying power. And at the same time, I think the input cost is remaining under control for most of these companies, largely because of the commodity prices are remaining largely settled at this point of time. Given higher demand, given lower input costs, and given the ability of Indian auto companies, be it in four-wheelers, be it in two-wheelers, they have got a fantastic time ahead. Say, for example, commercial vehicles. Say, for example, buses, electric vehicles within that. I believe that I think the new generation of demand is happening in this area of activity. And that's where I think one remains absolutely very convinced and remain, I think, invested into this counters. I think that some of the companies have run up a bit more, but correction in the price could mean a buying opportunity. As of now, I think we believe that I think one should stay invested in auto and maybe pick up some of the good quality auto ancillary stocks in the portfolio.
Sudeep, let me come to you on some of the banks and PSB banks specifically. Anything that you like over here going forward? You know, that whole cut which came in public sector companies, PSB banks, was still relatively secure. What would you want to accumulate at this point?
See, within the PSU banking space, there are clearly two sets of banks that we feel. One is the Bank of Baroda's, Canara Bank, PNB's, Union Bank. But on the other hand of the spectrum, there is Bank of Maharashtra, then PSB, or a whole lot of other banks. So within both the segments, from the first segment, we feel that Bank of Baroda as well as PNB could continue doing well in the next few sessions to come. And also a stock like Bank of Maharashtra also, we feel that could really do well from here on also. Because see, after a decent amount of consolidation between September and January, the stock had broken out of 50 levels on the upside. And once again, it has retested its 10-day exponential moving average and witnessed a bounce back on Friday from the same levels. So I feel this stock could continue doing well. And also, if you see the last few quarterly numbers of Bank of Maharashtra, they have been really good. So here, this is a case of the valuations also supporting the stock price, the results also supporting the stock price. So I feel that within the entire PSU banking gamut, Bank of Baroda, then PNB, as well as Bank of Maharashtra would be our top picks.
Okay, and the pre-open rates will settle in just a moment from now, but have to mark the other big view that has come in on India, and that is the Morgan Stanley note that has come in from Jonathan Garner this morning, wherein he says that India is the top EM pick. The premium valuations will be driven by superior fundamentals. I think that's the key point that Jonathan Garner and team are making, that we know expensive valuations are expensive, but the fundamentals are superior. We'll get the other views from them. They expect structural outperformance of India in 2020s is what the note says. So it's not just for the next 1 year, possibly for the rest of the decade. The outperformance on nominal GDP, capex, and digitalization agenda are the key factors that will probably drive this outperformance. Remember, India is not the only one. They also speak about Japan as being a preferred Asia Pac play, but India is certainly out there within Asia and within EMs as one of the top ideas, and they expect financials and industries to recover in 2024. Now, this is the big thing. Institutional investors, Jonathan Garner has a pulse on what institutional money could do. If insti money comes back, then certainly financials and IT will benefit quite a bit. So can this happen is the question. But when Morgan Stanley says you pay attention. And the last point, it says expect India to be the key driver for global growth in 2020. So independent of what the targets are, guys, but just the fact that there's Morgan Stanley coming out and saying that, hey, take notice, we believe India still remains our top pick. I think that is a really big statement, Samina.
Right, that is Morgan Stanley's view on India. Very, very optimistic. The bulls on the street are definitely going to be excited about this. Got a couple of minutes to go as we gear up for trade. Sudeep, very quickly on oil and gas stocks, they've also had and drawn about quite a bit of trader attention in the last couple of weeks. This morning, of course, we're coming to disappointing numbers from ONGC. How would you trade your upstream and downstream companies, if at all you trade them?
What we've seen in case of ONGC is, firstly, just coming to ONGC now, ONGC had rallied from 230 to almost 270. And on Friday, it had taken support at 259, 260 levels and witnessed some kind of a bounce back. So I feel that these last 3-4 days low of 259, 258 levels would be a crucial zone to watch out for. If at all ONGC opens lower and sustains below this level of 260, 259, then the profit booking could take the stock down to 248 levels. So I would not go long, at least for the first 30 minutes. Just watch out for the stock reaction there. And apart from ONGC, one stock which has been doing well is Oil India now. So Oil India is on a big uptrend. Last few sessions, we have seen higher top, higher bottom formations also on the daily as well as on the weekly charts also. So while there is some weakness visible in ONGC, there is strength visible in Oil India. And also, if you see Reliance, now this stock also has seen a fair bit of buying in the last few days from the lows of 2860, 2870 levels. And in a way that this stock has been instrumental in holding out Nifty also in the last few sessions. So I feel from positional perspective, Oil India and Reliance would be our top picks, and ONGC should be on a wait and watch mode.
Just a quick word from Deven on ONGC. And Deven bhai, if you track SJVN as well, SJVN also down fair bit on the back of numbers pre-market. Nearly 11%, ONGC looking like it's set for a weak start. Any take on this space and the sense that perhaps valuations have run ahead of performance here?
Absolutely. I think the price is basically moving quite ahead of the potential. As I was making a point a while back, the potentials of ONGC, Oil India, all marketing companies would remain extremely high. At the same time, I think the kind of renewable and the green hydrogen foray that is now in making, I think is going to give significant amount of upside potential to these companies. But one must remember well that I think these are not the businesses I think which would get scaled up in a non-linear fashion. I think they will only get scaled up, I think, with the growth in the economy. It cannot be scaled up, I think, with the market, the way in which market euphoria gets created. So I'm very clear about it that great businesses, great potential. Don't expect, I think, too much of number gameplay as far as I think these companies are concerned on a quarterly basis. Stay invested if you hold these companies. However, I think if you don't, I think wait for better opportunity to buy into the portfolio.
So, wait and watch if you want to buy in. If you are holding, then perhaps you'll have to hang on for a bit for now. But in the entire power space, Devin Bhai, if you could come in on that as well, because you're going to see Tata Power also perhaps with a weak sort of opening this morning. On the back of numbers and that same sense that perhaps it's become overpriced and run ahead of valuations. Do you think that the power energy space is something that you keep a distance from now on, or you see at least some sparks over there, some potential there?
Well, again, I guess I think the fundamental approach remains same on this particular case. You have economy growing at inflation for GDP growth rate of around 11.5-12%. And on that growth rate, I think the industry is also showing a corresponding growth of 15% plus kind of a growth. When we are seeing this kind of a growth, electricity per se as a utility cannot be growing faster than what the industry rate of growth is. I think so it will also consume or get, I think, grown on the particular subject, I think, with the same rate of growth. Now, if you start giving the valuation of 2027, 2028 in 2024, then probably I think you will have to face the problem, because I think the stocks will not perform. They will basically, I think, have the time correction apart from having the price correction. So to a greater extent, I think this is a situation happening in one and another company. One of the reasons for which this is happening, because infrastructure play, people do want to buy in India, definitely for sure, and that should be the case for most of the insurance company, pension companies, sovereign funds to buy into the infrastructure. However, when I think the other than these players who buy into the infrastructure and they buy into the euphoric places, probably I think they are buying expensive. In my viewpoint, I think one is have to rationalize the buying into the infrastructure companies, utility companies. In a systematic manner, one should buy when the market gives opportunity during the corrected levels. I believe that power story in India is remaining strong. However, the valuations are run up ahead of time.
Valuations ahead of time, and I think and that's been Devin's grouse for a lot of pockets this morning, so bear that in mind. Important to pin in. 20 seconds left for the markets to kickstart trade. Stay on, gentlemen. We'll take in opening thoughts from you and then let you go. But looks like we'll have a flattish start today. Nothing untoward on the index maybe, but a lot of specific pockets, particularly PSUs, maybe some pharma names could be in focus in terms of movement. But let's highlight the big boys on open first. And here are the first rates. 21,800, hardly anything to write home about. Flat for the Sensex. Let's look at banks. Again, flattish move, no changes there. Our mid caps and small caps doing the same. It's a quiet morning, you have to admit. Nothing great. I wonder if there is any point in showing the heat map. Well, there is, we'll show it. And then Tamanna and Samina will highlight the broader end of the spectrum. Dr. Reddy's up 2%. Divi's, well, the margin uptick gains prominence over the no so many triggers over the near term argument for now. But Dr. Reddy is up 2.5%. Wonder I've missed something out there. But the top gainer on the index, UPL, comes back. Well, it seems like a clutch of stocks which have not been performing are going up. IT is right up there, by the way. HCL Tech, Wipro, Infi, LTI, Tech Mahindra. All five in the top list, except for TCS, which actually reached all-time highs last week. Everything else is in the green. TCS must be somewhere there. Yeah, the 11th stock. Even Stevens between the losers and the gainers. What's losing out? Hero MotoCorp, 3% lower. Just in line with estimates. Maybe that is what it disappointed. I don't know. ONGC reacting, not so much, but reacting duly to results. Power Grid has had an iffy up one day, down next day kind of a week. Last week in the results piece. And it starts off as one of the top losers as well. Aside of that, not too much. Maybe the action is in the broader end of the spectrum. But hey, Divi's Lab, 1.8%. Tamanna highlighted it. I thought the brokerages were negative, but for now, that view seems to be winning. Divi's Lab up about 2% in trade, Tamanna.
Yeah, absolutely. We called it this morning. So Divi is definitely doing well. The pharma sector, having a good day. But Dawa and Daru. So let's talk about United Breweries now as we move into some of the stocks that have had a result flow coming in and were on our radar. UBL down 2% in open trade. So the numbers didn't seem bad, but ahead of elections, there is a bit of a risk. At least that's how Citi looked at it. They say profitability could also be volatile, and earnings estimates were cut by 8% for the full financial year. So that stock now seeing a pretty bumpy start. Apollo Hospitals, though, had good reviews all round. Brokerages were bullish, but in a market that isn't in a great mood today, you're seeing a tepid response to Apollo Hospitals. Overall, numbers weren't bad at all, to be honest. Honasa is the other one that is on our list, and we'll be speaking to the management ahead as well. Honasa, on the face of it, numbers look great, and the market is rewarding it as well. About 6.5–7% up. Sri Renuka, poor numbers. SJVN, very poor numbers. And all of that impact this morning, earnings impact, leading the big movers on the markets. And you're seeing that completely play out. Sri Renuka, definitely a disappointment. In fact, JM Financial has set for SJVN a target price of quite low, very low, for almost 49% less is their target price for SJVN. Just Tata Power is the other one that we will look at. Again, results which weren't very, very exciting. A sell call coming in here, overvaluation concerns, and that stock about 3% down. So most things on my list, Samina, down in the red this morning. Are you seeing spots of green?
Of green, but you know what's happening, Tamanna? Interestingly, we usually see big gains across the broader markets, and they maybe were limited to a few stocks. But this morning, we're not even getting that. The biggest gainer in terms of percentage in the Nifty 500 is E-Strip, and it's not a very big gain. It's up about 3.5%. So no runaway rally in terms of earnings reaction this morning. E-Strip is up 3.5%. They've talked about, and this is not even regarding earnings, right? They've talked about opening a 5-star hotel in Ayodhya, and that is what is driving the stock up this morning. Apart from that, Aurobindo Pharma, that has already been in talk. We've talked about this one. Very strong set of earnings from the company. The reaction is good. It's not a runaway rally in Aurobindo. 3% gains on Auro Pharma after the company posted record profits and highest ever margins of over 20% since December 2021. So you've got Birla Corp as well, that's up 4%. E-Strip, Aurobindo Pharma, like I mentioned. Divi's Laboratory as well. If you can take a look at how that stock is doing, up 2.5%. Niraj, of course, highlighted that a few minutes ago. Godrej Industries, if you can get that one up, it should be helpful to see how the count is reacting to its earnings. It's a thumbs down on the stock, 1.5% off on the stock. PB Fintech, we took you through what the brokerages have to say. They largely seem quite excited about the company on back of those brokerage upgrades. The stock trades the gain of 2.5%. Along with that, 197 Communications seeing a little bit of buying this morning, 2.5% up move on the counter, but still struggling at levels of 430 in today's trade. Well, apart from that, there are lots of earnings reaction. I'll quickly take you through those. If you can pull up Bandan Bank, Dish TV, PI Industries. So as you fire the stocks, we'll talk about that. Bandan Bank, so that's an earnings reaction. Dish TV, PI Industries, IRFC. Weak numbers there. The market seemed disappointed. PI now posted a good quarter, but the stock is down 1%. IRFC is trading down with a cut of 2.5–3%. Parag Milk, that's the other one, 4% lower, 4% higher on that stock. 4.5% higher on that stock is what we have. MCX, numbers weren't great. The stock does look a little weak in trade this morning, 2.5% on this one. Sri Renuka Sugar, if I can get that one too on the screen, it should be helpful to understand what is happening to Sri Renuka Sugar. Weak numbers, the stock is down about 2%. Inox Wind Energy, Wind Energy, Vishnu Prakash, all those are going to be earnings reaction. Inox Wind is up 3.5%. Inox Wind Energy, on the other hand, is trading flat. Vishnu Prakash, DOMS, Cello, Landmark Cars are some of the other names, and I'm guessing Niraj and Tamanna will continue with the list, but lots of earnings reaction. But what is, I don't know whether, Niraj, you know what's happening, but Aarti Industries, I know those brokerages were quite optimistic. We are seeing a turnaround on the company, but also you've got Birla Corporation that jumped out of nowhere, 3.5% gain this morning on the stock.
Maybe.
Yeah. Maybe that, okay,
yeah,
that's probably what it is.
Yeah, but just one stock I want to mark is LIC. Now, the stock is up about 3% today. Maybe some income tax refund. JP Morgan upgrades the stock price target as well. So after seeing one dip, while PSUs are iffy, Life Insurance Corporation of India has done remarkably well, 2.5% or 3% higher in trade this morning. Initial thoughts from our experts. LIC, Devane, if somebody wants to look at insurance, is LIC a good option or is something else better, or you avoid this pack completely?
No, LIC remains, I think, absolutely very convincing option. No questions asked on this aspect. On one side, you have a fantastic amount of demography reach that we have created. That's unparalleled to any other insurance companies. At the same time, I think adapting to digitization to further expand the reach is another important point. What I like most about this business and the possibility is that they are all creating the micro insurance products. And that is going to create the same amount of effect, I think, which the AMC, the mutual funds have created by way of SIPs. So from that particular perspective, I think the potential remains absolutely very convincing and very strong. And LIC remains absolutely very convincing play. At the same time, I think we also look at the investment portfolio of LIC. This is where I think my eyes are on. Some of the best quality stocks are held in the portfolio. And if I consider that India's market capitalization is moving from $4 trillion to $10, $12 billion in 2035, one company which will get phenomenally benefited in next 10 years would be LIC. So from all this perspective, apart from the business, I think the investments, they remain, I think, a very strong play as far as the balance sheet of LIC is concerned for the shareholders as well.
Insurance pack in focus, definitely, but LIC, the star of that show, even if you look at the others, GIC, etc., and see what they're doing. Sudeep, any thoughts of LIC? A cracker of a quarter, and the outlook on the stock has changed. It took a while to even get to its IPO price. Do you see a sustained breakout there?
Yes, I do see, because it has taken a lot of time for it to come back to its IPO price. But once it has taken that out, we have seen a big rally on the upside, and I feel that this is just a start after a big consolidation. So although there would be intermediate dips in between, but overall this stock is on a strong footing compared to all other insurance stocks, and I feel from these levels also, or on dips, minor dips from here on, this should be added from a medium-term to long-term perspective. Even from a trading perspective, the trend is firmly on the upside. So overall, I feel till the time 1040, 1050 levels are held, this stock could continue its upwards momentum up to 1250, 1270 in the next few weeks to come.
Sudeep and Devane, those are a few questions that you've answered for us. But very quickly, Sudeep, if I had to ask you, any trade that you've picked up since markets have opened, any reaction that has caught you by surprise that you would then trade on this morning? Maybe intraday also.
See, a couple of stocks. One is Birla Corp. Now, while we've at the beginning of the show discussed Grasim as a top pick from the cement stock, we are even seeing the Birla Corp showing strong moves in the last few sessions, and even post today's opening, where a lot of mid caps or a lot of other stocks are witnessing pressures, but this stock is gaining from strength to strength. So I feel that this should be on investors and traders' radar, and this could do well in the next couple of sessions also from here on.
Pfizer, Zydus Life, all of them having a good day. Positive reports over there. A stock we haven't marked is 197. We mentioned it in our pre-open that there might be some relief over there coming in for Paytm. We broke the story that there is going to be an extension perhaps on the 29th Feb deadline, from the point of view of allowing customers to pull out what they need to from the Paytm Payments Bank. But there has been a positive reaction on that. Thank you so much, Sudeep and Deepak, for joining us today. We're going to take a very quick break, but on the other side, we speak with Chandrasekhar Ghosh of Bandan Bank to talk about the company's Q3.
Hello and welcome to NDTV Profit. You're joining us on Earnings Edge, and today we're discussing the Bandan Bank Q3 numbers, which came in a little while ago. So Bandan Bank, of course, has reported a 730 odd crore worth of net profit. This is more than double of what it reported last year. Of course, on the profit growth is largely being aided by an improvement on the provisioning side. The provisions has been lower during the current quarter, December quarter, compared to last year. If you look at the operating profit side, of course, there's been a bit of a dip, and this is largely coming in due to the operational expenses. I have with me Mr. Chandrasekhar Ghosh, the MD and CEO of Bandan Bank. Mr. Ghosh, welcome to this conversation. My first question, sir, is with regard to this OPEX number. Now, the operating expenses have gone up year on year as well as quarter on quarter. If you could just tell us what exactly has happened during the December quarter to push this up.
Thank you to given these opportunities to share on that. Of course, there is an operational cost, a little bit is increase. We are looking on that, the operational expenses on asset. So if we see that the operational expenses on asset, it was in that the 3.5%. It was in the first quarter. Second quarter, it has come to the 3.7. Again, it has come down in the third quarter, 3.6. So we feel that it is in a range of our prediction on that, the 3.5 to 3.7% in that operational expenses on advanced assets. Second point on that, you know that the quarter we are new IT system have been introduced. We are transformed from the old CBS to the new CBS, and many of the application we are introduced. So it has been also little bit cost has come. The last couple of quarters we have been increased the 500 new branch open. We are also given that the good number of employees to them, those branches to serve on that to the customer. So these are also have been also taken, some of the cost of operation has increased. And I hope that it is not we are looking as a cost of operation. I am looking it in a cost of investment. And that investment will give the future business growth. We have been planned on that, and that will be like the way we are looking it on that.
Okay. Coming to the core business front now, NII has grown strongly during the quarter. But if you look at your net interest margin front, there again, there's been a bit of a stabilization. I just want to get a sense as to what is happening on the core business front, because your loans are growing about 18.5%, deposits are growing close to 15%. How is this operational sort of improvement helping as far as your net interest margin is concerned and your overall business growth is concerned, sir?
If I say that operationally, the banking industry today, there is a cost of fund has increased because of the deposit rate increase, and the liquidity is very tight in the market. And that is the one cost has come to every bank on that. So that is the one part. But other part is there, that because of the quality of the portfolio is increased, and so that is in there's a slippage point of view and the provision point of view, it has come to control. That have been taken on that, both the side are managed on that, the NIM. And I saw that the NIM in the bank are maintaining 7.2% in the last quarter, and this quarter also 7.2%, which was the last year is a 6.9%. So better than that. So we feel that it is a good NIM on that, though it is a cost of fund little bit increase, but other efficiency also helped us to maintain this 7.2% of the NIM. And we feel that the next also quarter, we can be like to maintain on that the 7.7 to 7.5 as per our guidance.
Your gross NPA ratio at about 7%. I just wanted to get a sense as to what the outlook is looking like for Bandan Bank. This quarter, the net slippages are lower. Gross slippages are slightly higher, but this is primarily being adjusted because of a sale to NPA that you did during the quarter. I wanted to know what the outlook on asset quality is, gross NPA trend. What is that looking like?
But we saw that in the data showing that is in, we have been seeing that also collection efficiency has come 99%. That is one side is there. Other side, we saw that there is a measure of the portfolio which are shown as an NPA is an earlier because of pandemic. After that, if you see this is the portfolio DPD, SMA 012, and DPD has come 3.4%. SMA 0 is a 1.5%. SMA 1 is a 0.9%. SMA 2 is a 1%. And what we see that it has been 3.4% has come to this quarter, which was in the last quarter 4.8%. So I saw that this has been come down. If I go to this, the first quarter, it was in a 5.6%. So every quarter it has come to 1% and the during that period, that will be given the comfort on that. It is gradually it is coming down on that. So this is the portfolio quality point of view is see that. Again, another point I mentioned about it on that, this is in slippage has come 1,300 crores in the every quarter, and 400 crores have been recovered, and 900 crores as a net NPA has come on that quarter-on-quarter basis. So it shows that it has been not increasing, it is in control on that. And overall bank has been provisioned 600 crores in every quarter. So I feel that this is gradually it is coming up as a quality of the portfolio. Other part on that, whatever our microcredit portfolio or what I say that the EV portfolio this year, whatever we are disbursed in the 2023 and 24, that the portfolio outstanding is a total outstanding of the EEB book is a 85% plus. Among this, the portfolio NPA only the 35 crores, which is a 0.11%, which is showing that the new portfolio, what happened developing on that, gradually coming very better than the earlier pandemic portfolio, and which have been also shows that the very good comfort on that. The quality of the portfolio future is better. NPA will coming down. And of course, the slippage already shown that they're coming down on that.
Is there any number on the gross NPA that you're targeting with respect to your business?
Number of?
The gross NPA, is there a ratio that you're targeting?
No, we'll be like to see that how the quality of the portfolio increase and recovery will come. So we see that it will be gradually come down on that, and hopefully this quarter is the best quarter for every year. It will be like to drastically will be like to help us to reduce on that.
As far as your CASA ratio goes, you're at about 36.1%. Overall, your deposits are growing about 14.5%, 15% odd. I wanted to get a sense from you as to what is stopping the banking sector from pushing up retail deposit growth, because there's a lot of emphasis on the wholesale growth portion of the deposits. People are depending on the bulk deposit side to sort of push up their deposit base. But according to your mind, what is exactly stopping banks from going after the retail deposits?
If while my learning of the last 8.5 years in the banking industry, though I am not was in a experienced banker, but we learned about from the beginning to reach to the retail people are more. And then we'll be like to getting that the retail deposit is more to the bank. And which we are focused from the beginning. Until now, we are continuing. We are also like to future continuing on that to reach physically to the customer, who are the retail. And second point, we see that there is a lot of opportunities in our country, semi-urban and rural areas, to physical branch, to give a confidence to the customer that they will trust more and very quick, and they will be like to come to this banking system to deposit their money. So in this, all of this, the things we are practicing last couple of years, and we are also focusing on that, how our employee can be like to reach to the all people who are like to come to this banking system and the deposit their money and to the bank. And that is only the way we have been seeing that there is a retail deposit we can be attract. And of course, the service to the customer and satisfied to the customer with a good behavior and very transparent way to given that all information to the customer. It is also another way confidence has come from the customer and given to this the opportunities of the retail customer attract to the bank. So this is the way we are going. Of course, there is a not bank cannot be go in the bulk. The bulk deposit means other customer also who have the bulk deposit opportunities in there. Bank should be like to attract on that. It is not only one segment will be like to make it. So in that sense, we are overall bank like to provide to the customer service and take that opportunities to grow the business deposit growth in the bank. And this is Bandan is practicing in that way.
All right, the last question from my side, sir. There was some announcement that came from the bank with regard to the NCGTC portfolio review. They called it a forensic audit, but according to you, it's a review. I just want to get an update on where that is at this point in time, sir.
So there is details we are already disclosed on that, but we are like to mention about it, the update on that. Whatever the data is needed to detailed audit on that, and we are provided already, and they are doing it on that because the data is in use. So whenever it will be like to some queries will come to us. Till now we have not get any queries, and whenever they will be like to complete it, we will be get the report, and accordingly it will be like to confidence on that. We will be like to get the benefit on that.
All right, Mr. Ghosh, thank you so much for joining us on this conversation. It's a pleasure talking to you, sir.
Thank you. Thank you to you.
Welcome back. You're watching India Market Open, and one stock that is in focus is United Breweries. They posted earnings last week. It's a pretty strong sort of numbers coming in on the front line, on the top line, of course, but some sort of margin pressure is what was seen for UBL. We have with us the management, Vivek Gupta, MD and CEO at United Breweries, joining in. Vivek, good morning. Hi. It's been a pretty good quarter for United Breweries, at least on the face of it. Take me through demand trends in the next few quarters. Growth, I believe, this quarter was driven by the South and the East market, while North still is a pain point. Give us some color in terms of what we can expect on volume growth for the new few quarters out.
Yeah, good morning, and thank you for having me. Indeed, we had a very good quarter last quarter. We finished with 8% volume growth and 13% revenue growth. I think the growth was quite broad-based. We actually grew double-digit in both in West, in East, and in South. Yes, North was a decline because of some of the changes which are happening in the landscape there, some of the conscious choices we made, and some of the interventions which are going on in some of the markets where we are waiting for policy news there. Overall, we feel very positive about the trends going forward. We know that the trend is on sessionable beer consumption. Our focus is on growing quarter on quarter and really serve the consumers with our innovation and product portfolio. So we are getting into the season. So fingers crossed. We are really hoping that we will have a good quarter as well.
Right. Vivek, let's talk about the state mix before we talk about the product mix and, of course, the margin picture. North volumes have declined marginally. East has done quite well for you, up 22%. South has also seen a growth of about 10-odd%. And West has seen a growth of 9%. Now, in terms of putting a little bit of a number to that, how do you see things playing out in the next few quarters state-wise? Do you feel like things in Delhi will come back on track, and Tamil Nadu, Kerala could also play ball?
See, one of the strengths of United Breweries is we have a very broad-based portfolio and very broad-based market presence. We play in almost all the states where beer selling is allowed. So actually, we are very confident on business coming back in North as well. But at the same time, it is going to be an election season for the next quarter. So we will be actually quite cautiously optimistic, depending on the disruptions which are going to happen due to the elections. But we overall feel very confident that our state mix will continue to grow. We are also bringing innovation and expansion of innovation in some of our core markets. For example, in Tamil Nadu, we are launching one of the very successful Ultra Max proposition very soon. We are also introducing Ultra Max draft beer in Karnataka and Maharashtra. We continue to see very positive results on our Heineken Silver innovation. So as we work in some of these markets, we will continue to see the upside. But yes, state mix is going to be tricky, and we will have to wait and watch how the policy framework come out in these states, given the scenario around elections.
Right. Vivek, a couple of other things I want to talk to you about. How much does premium products contribute to your top line? And I know premiumization has also worked out really well for United Breweries, and it's also worked out for the likes of United Spirits. It seems to be quite the theme in urban cities, at least as we see it right now in this earnings season.
Yeah, I think, as I have always maintained, that consumers are looking for economy, premium, mainstream. So it's the entire portfolio which is critical. I know premium is very important because consumers are looking for low alcohol, sessionable beer. For us, premium segment grew faster than our mainstream segment. We grew premium volumes by 14%. We actually grew shares in premium segment in the last quarter. So premium is absolutely critical. We have very strong products like Ultra Max, Heineken Silver. We're also planning to introduce some more portfolio over the next coming months. So we feel confident that we will continue to win in premium and continue to build the category through premium. We have a long way to go. We are slightly behind, on premium, but we'll make it up in the future quarters.
Right. What does market share currently stand at pan-India, Vivek? And what can we expect on market share going ahead?
So we estimate the market share. In December, we ended up with more than 50% market share as United Breweries on total beer category. Now, market share will continue. Our focus is on category growth versus actually growing market share. But we see the market share will be in the similar range over the quarter, but our bigger focus will be to grow category and expand the pie on beer, because only 85 to 90 million consumers in India drink beer as compared to almost 200 million who actually drink alcohol. So we really need to drive the category, and that's our key priority as a United Breweries.
The category you want to focus on and grow, I'm assuming that is going to come on the back of spending on marketing events, and I believe in Sunburn as well, the recall of UB stocking fish is at 87%. How much of your margins are then going to be impacted, or how much does marketing sort of take off in terms of your cost at this stage?
Yeah, in Q3, we actually, invested 300 basis point more on marketing and promotions. We'll continue to invest in brands. We'll continue to invest in category growth. We are very conscious of margins as well. So, of course, we are working a very strong cost program in the company. We are looking at a revenue mix program. So it will be a balanced growth. It will be a combination of top line, but at the same time, we are not going to take our eye off the margin. But our margin progression will be gradual, but our top line should actually be stronger.
Right. Also, if I have to ask you, outlook on margins, Vivek, going ahead, what is the margins that you will be able to maintain in the next few quarters around current levels, or do you think we can expect an uptick on the margin front as, of course, contribution from the premium segment also goes up?
See, we actually are in a very volatile environment. So we definitely get some tailwinds on barley prices, which is an important commodity in our product. But at the same time, we are also, as we drive more innovation, we have to infuse new bottles, which also takes away the margin. So I think our aim will be to grow the margins, but we will be responding based on the market needs.
And I believe one of the things that played out this quarter was the bottles, the return of bottles, right? Explain this to me. How much % of your bottles are new? How much do come back? Are there any measures taken to break that illicit trade that is happening in terms of reusable bottles?
No, thank you for raising that issue. I think new bottles immersion, when we actually launch new innovation, is a part of business model. When you launch a new brand or a new pack size, you have to insert new bottle, which costs us a lot. The second is we are working with our partners to ensure that for the sustainability, the reusable of bottle is increasing. Now, in some cases, there is this illicit trade which is going on crushing the bottles, which we are working with various government agencies and regulatory board and actually giving the awareness, because it is not good for sustainability when the color trade is booming. But having said that, I think we continue to work and strengthening our programs with our current bottle suppliers. But at the same time, as we bring new innovation, the new bottles will continue to be, it will be heavy up dose of new bottles in the beginning, and it will gradually streamline over a period of time.
Vivek, so until it gets streamlined, what is the sort of impact that is going to have on margins?
See, it is going to balance it out. As I said, we are going to have tailwinds on some of the commodities, and we will try to balance it. We have also made some interventions with our partners. So I think our aim is going to have a steady margin progress going forward.
Right. Employee expenses have also risen in this quarter. Is that because you've added more employees, or is it largely just inflation and investments that are being made on current employees?
No, we continue to invest in our capabilities. As I said, that one of the focuses we want to make ourselves as future ready. So we are investing in technology. We are investing in also the organization capabilities, in execution, in go-to-market, in brand building. And we're also investing in our manufacturing capabilities so that we actually prepare for 2030 versus actually really focused only on the current quarter. So I think it's the investment in our capabilities, and some of it will actually, as our revenue grows, will actually streamline as well.
Very quickly, Vivek, in your con call, you mentioned that over the next 2 weeks, the impact of MRP increase on pricing and margins, you will get some more clarity in Tamil Nadu. Also, you've said that there will be some volume recovery post the change in operating model. Can you elaborate a little bit on that? What MRP increase are we talking about? When can we see that impact trickle into the numbers?
So as you know that in many state governments have taken price increases on beer. I think there is price increase in Tamil Nadu. So we are still learning what is the impact on our margins on that. And we were also learning that how consumers are going to respond. Usually there is 20 to 25 days of inventories in the trade. So actually we will only know in a month's time when consumer will start seeing the slightly expensive beer they will have to buy. So we'll have to understand that. So that is what I mentioned, that will wait for the response. But given the macro trends, we are very positive that we will continue to create interest and purchase intent for beer through our programs and through our better execution in store. But how this all impact, we will see when the rubber hits the road.
Right. Also, very lastly, Vivek, you want to tell us about your strategic initiatives and how that is expected to contribute to your top line in the next 2 to 3 quarters or calendar year 24?
Yeah, I think as I said, our priority is to drive category growth. I think the first priority is to really fill the portfolio in economy, premium, mainstream, super premium. So you'll continue to see a stream of innovation from UBL. Second, our priority is to work with the regulators to continuously drive and pitch for moderation. As I mentioned, 200 million people in India drink alcohol, but only 85 to 90 drink beer, and beer is moderate alcohol. Even World Health Organization has already started talking about the need to have moderate drinking. So I think we need to continuously educate and work with our regulators to ensure that the taxation on beer is fair and beer becomes more affordable and accessible. And the third is we continue to keep ourselves as future ready in terms of the investment we are going to do in expanding our capacities in our organization, in our capabilities. So those are the 3 strategic priorities. And hopefully we'll continue to see the category growth and momentum on the business.
I'm excited for you. I'm excited for UBL. Good luck. It looks like it's going to be promising in this calendar year. We'll hopefully catch up with you.
We need all the luck. Thank you for your question. Thank you.
Thank you very much. That was Vivek Gupta of United Breweries charting it out for us about how it looks for the company, the product mix, the state mix, all working in favor of United Breweries for now. In the meantime, the markets continue to spend time consolidating, so no relief there from a little bit of selling that we're seeing at high levels, 21,725. Remember, 21,700 will be an important level of support for the markets to watch out for. Bank Nifty as well has been reeling under pressure. This morning is no different. PSU banks also seeing some selling pressure. Hero Motor reported good earnings, but despite a good performance, the stock gets a thumbs down, 3% lower on Hero Motor Corp. ONGC as well on back of weak numbers is off 3%. BPCL not looking good. So remember, oil and gas and OMCs after a slew of brokerage upgrades, talking about a re-rating for OMCs and downstream companies have gained, and now of course seeing some profit taking. But Tamanna, even the broader markets earnings reaction, and that's largely what the markets are focusing on.
Yeah, I just wanted to highlight Coal India. Numbers are expected later today, and there is a slide which is being expected. Already the stock is 3.5% down. So if you look at the overall theme in ONGC, BPCL, Power Grid, NTPC, that whole energy pack is looking quite demure, I would say. Fresh listing though taking place. Remember, this is going to be a week of listings, I think 5 in all, and APJ Surendra Park Hotels is the one being listed. Right now you're seeing the D Street debut of the company. Let's just pull up and see what the price seems to be. We have seen a massive run-up for IPOs, great season for IPOs last year. Will it continue? So a decent listing. I wouldn't say it's a complete cracker, but take it. It's opened up about with a 17% premium. So we'll keep an eye on that. We'll get you also information about all the other listings we're expecting this week. But right now, we'll take a very short break. On the other side, I'm speaking with Ramanpreet Sohi of Honasa Consumer. You'll also hear from Premchand Devarakonda of EML on their third quarter performance. Stay tuned. Welcome, you're watching NDTV Profit. I'm Tamanna Inamdar and you're watching Earnings Edge. The company we're focusing on today is a recently listed parent of Mama Earth, Honasa Consumers. Their Q3 numbers are looking great on the face of it. The net profit has soared 265% year on year. Margins have expanded by close to 400 basis points. Now, the question is that can they see sustained revenue growth? From the con call, the management has indicated that consumption has been slow. When do they see a recovery on this? This and a whole host of questions now for the Chief Financial Officer, Ramanpreet Sohi, who's joining us on the show. Ramanpreet, hi. Great to speak with you here on NDTV Profit. Let's begin by talking about this quarter and what has driven those profit numbers. Your margins also have expanded, very decent expansion there. Net profits have also expanded. Are you seeing this coming in from revenue growth or from a curb on operational expenses?
Yeah, no, absolutely. Hi, good morning to you. Thanks for having me. Like we said, of course, we delivered almost 28% growth for the quarter. And from a like-for-like basis, which is our product business, actually delivered 30% growth. So as we sort of see scale up for our brands, Mama Earth and our younger brands, we're clearly seeing the scale up happening at an efficient, leverage across A&P and some of the other line items in our P&L. Of course, a larger sort of driver for our margin expansion has been efficiency in A&P, which has been optimized by almost 200 bips from a year-on-year basis. I think that continues to be our biggest lever in terms of margin unlocking as we look ahead. And I think in our views, we think we have clear levers to unlock about 100 to 150 bips in operating margins from a year-on-year perspective. And of course, the growth has also, at a 30% kind of a growth from a YTD perspective and for the quarter perspective, that of course also helps leverage to kick in.